Welcome to Second Take, the show that focuses on the issues behind the news. Eskom has been in the spotlight over the past few days, during which it marked some major project progress and announced higher earnings. Terence Creamer joins me to discuss the state of the state-owned utility. Terence, welcome to Second Take. By all accounts, Eskom is performing better financially, and it also seems to be getting a grip on its operational and maintenance issues.
Yes, financially, I don't know how happy South Africans will be to see it, but financially this week they came out with a revenue of 114 billion rand. That's up from, the mid-90s last year, and they made a profit of 13 billion rand. So financially, they sort of ticking up and performing on all those key ratios. Although they keep reminding us that we're not at cost-reflective tariffs, and if you use the regulatory model of doing their financial analysis, they're still in a sort of loss-making position because of the way the regulator does the analysis. But on the whole, there's an improved financial performance, and I think South Africans have to swallow hard when they see their tariff increases. We're now paying, or Eskom is receiving an average of 50 cents a kilowatt hour. That's way up on what it was before the crisis. We were in the 22 type cents a kilowatt hour range. Last year it was in the 40 cents a kilowatt hour range, and the year before 30 cents a kilowatt hour range. So we're going up quite steeply every year, and obviously there's been another increase from April 1 of 16%, lower than the 25 that was expected for the year, or had been mandated or sanctioned for the year. So financially they seem to be on a sounder footing. They've also got their funding plan. 78% of their funding plan is now financed, and the rest is really in place. The infrastructure for the balance of the 340 billion capital program, and the funding associated with that, over 300 billion, is in place. So financially I think there's a lot more confidence at Eskom, but they're still saying on a different metrics. They're not an investment grade yet, and they rely heavily on South Africa's sovereign rating to get the capital and raise the capital and the debt finance in the way they do at the cheap rates they do. But I think also technically there's a new confidence. I think with this new management team at Eskom, there's a renewed confidence that they getting on top of their plant performance issues. Their maintenance backlog has been reduced from 36 unit outages down to 26. They're wanting to eliminate it by the end of 2013, which is a tall order considering that we're in winter now, but they're continuing through winter for the first time in their history with a maintenance program, which basically shows that they sort of have I think renewed confidence that they can continue with maintenance and keep the lights on. And still there's some technical performance issues. There's still unplanned outages at higher levels, but on the whole you get the feeling that the management more and more have got their head around a lot of the problems and are starting to deal with them decisively, whether they financial, and I think they've had a lot of help from government and from consumers in that regard, whether they're technical or whether there's some fundamental things about running the business, especially around maintenance, and they are getting those right. I think there's still some loose ends, and I think the big loose end is around primary energy. Every time they have to switch on those gas turbines, it's very, very expensive. Their coal prices have been rocketing over the last few years. Again, another 17% increase on their coal prices in the last financial year. And I think we saw now we've got political backing from the minister saying that he's wanting to knock some heads together around the coal miners and Eskom, and trying to find a way to get those costs to sort of inflation type levels over the next couple of years.
The Eskom management is also expressing confidence in the performance of its 340 billion rand investment program.
Yes, I think there again, very difficult start to the investment program. They were not mandated, or saying there was no mandate for Eskom to build up until 2004. And then there was a rush to get some of these projects through. There was no funding plan for the projects. Those projects were called Alpha and Charlie, etc. I don't know if you can remember all those code names. Then we started to see them emerge as Medupi and Kusilia and Ngula. But those projects went ahead without the funding plan. Actually the design and the engineering around that was also a little bit shaky to start with. And we saw that with the delays at the Medupi site especially. And then Kusile had to be almost totally stopped because the funding wasn't in place. So I think now with the funding in place, I think that's now enabled them to really start focusing on the delivery of these capital projects. And again, we had major teething problems, if we can call them those, probably worse than that, at the Medupi site. Right from the start, these became problem contracts for the suppliers, as well as for the construction companies. Everyone was making losses, and there's a lot of negativity, negative vibes, continual delays with the Medupi program. And what we're seeing now, I think, with the milestone hydrostatic pressure test, which got underway the last few weeks at the Medupi site, is that some of these contractors have really come to the party and are starting to claw back those time losses and also those design problems, and just the way things were running on the site weren't ideal. And it does look like a fairly impressive site now. And it looks like Hitachi in particular has come to the party with the boiler. And that first unit is being tested at the moment. And then the focus will shift from the boiler unit to the turbine hall, where Alstom has to come in. So Eskom hasn't said that they're going to bring forward any dates. They've revised the dates all the way back to the end of 2013. They're not that confident to say that we're going to have first power earlier than that. But you get the sense that things are happening, things are a lot more optimistic on those project sites, that there's a lot more control and oversight on those sites, and that people are happier. You speak to the Hitachis and the Alstoms and especially like the Mariaan Robertses, and you get the feeling that these things, they're not like this drain on them anymore. They've come to sort of executive level decisions about how they're going to manage that site. And now that makes the implementation far easier for the people on site, that there's sort of not this behind the scenes unhappiness and people pointing fingers at each other, but now that everyone's sort of on the same page and we can start really building. And I think the first Medupi unit will come on probably ahead of hopefully ahead of what we currently have on paper. And the second one is right behind, and we hear that the Kusile is also starting to do good work on that site, and Ngula apparently is also going quite well. So those are the projects that are part of the funding that are funded, fully funded. They're the ones that take us to add 17,000 megawatts between 2005 and 2018. So they are the big projects. Beyond that, then we'll have to see. A lot of the private projects will start coming in. Whether Eskom will continue in this vein beyond 2018 requires, I think, quite a lot of decisions from government.
Let's just look at the next round of tariff applications. What can we expect?
I think that's going to be the next big focus. We hear that the tariff application is going to be submitted in July. We also, realize that the tariff application isn't going to be for the usual 3-year horizon. So we've had MRPD 1, MRPD 2, both had to be reopened at some point. Well, MRPD 1 had to be reopened. MRPD 2, was much higher than people would have liked. So I think Eskom's sort of warned us, they have to transition to cost-reflective tariffs. They claim cost-reflective tariffs are a proxy for that should be what they get from what they are currently paying the independent power producers, which is in the range of sort of 70 cents to 1 rand or more. And with the renewable projects coming on from next year, those are going to be quite a bit higher than that, the initial projects anyway. So they're saying, that's probably more cost reflective. We're at the 50.3 cents kilowatt hour level. That's quite a big jump to take us all the way to the sort of 80 type cents, 90 cents. And I think that the MRPD is going to Eskom's going to try and transition to that sort of cost reflectivity. But I think they are sensitive to the need not to transition too quickly. So I think we're going to see at least a 5-year application, but maybe even longer from Eskom. And but I think it's still going to be highly contested. I think business is going to respond to it quite aggressively. And I think also civil society is going to respond to say we're not too sure about rising at this sort of rate. What is it going to be the impact, not just on inflation, but really on the growth outlook for this economy? And if you look at that, actually Eskom, yes, they've got a supply problem at the moment, but actually Eskom's got a demand problem. You know, we're seeing 0.2% increase in sales last year. That's shocking. That's against the expectation of 2% sales. Brian Dahms, the CEO, is talking about well below 2% type yearly growth rates. You know, we're going to have this new capacity, brand new, spanking new capacity coming off out of Kusile, Medupi, Ngula. We're probably going to have better maintained kit. We're going to have new RPPs coming into the mix. We need to have this economy growing to consume that demand. Otherwise, the way the regulatory model works is that they have to recover their revenues. We could have these high prices actually going up even further, and we're not going to have the sort of demand for the electricity. So I think the focus at Eskom is going to have to shift from, you know, this perpetual thing of saying you've got a supply problem, we've got a supply problem, to actually we need to start using this electricity for growth and development in this economy. And I think that shift's going to take obviously some time, because we still do have this short-term crisis. But we have to start focusing on our demand crisis at some point.
Terence, thank you very much. That is the Second Take show for this week. Thank you for watching, and join us again next time for more news analysis.